When indulging into the stock market, it can challenge you intellectually and it can also challenge you emotionally. You see the world on stage where retail investors like you and I are investing into companies that are going to drive us to the future. Write this down. You are paying if you're not paying attention. Let me say it to you again. You are paying if you're not paying attention. Now let's get into this. What's going on, fam, and welcome back to Think Thicc. Today we're going to be talking about the pros and cons of investing. Number one, you can stay ahead of inflation when you're investing into the stock market. As the government struggles to decide whether or not if they want to raise the minimum wage, companies are charging so much more because there's a ripple effect happening. Inflation is slowly taking your money out of your pocket day by day. Investing into the stock market, you will be able to keep up with inflation and go beyond. The S&P 500 has shown historically that you get an average of 10% per year. Inflation has taken around 2.21% of your money, and since the last 30 years, it has actually lost 93%. Think about this, 30 years ago, what you could get for $100, you would have to spend $193 today. Now I know 2.21% doesn't sound like much because it's only 2 cents on a buck, but on 100 grand, that's 2 grand. On $1 million, that's $20,000. So you can imagine that these companies are just jacking up their prices all the time while we are not getting paid enough. And don't even get me started on the hyperinflation that attacked us in 2020. There's been trillions of dollars that has been pumped into the economy. Number two, the pro to investing is you can make 3 ways just by simply owning a share in the stock market. You can always buy low and sell high, and that's how we all make money. But then you also make money through dividends. And dividends are a percentage of that share price that the company will pay you every year just for simply owning that stock. It's amazing. Now, if you're doing long-term investing and if you hold on to a stock for more than a year, then that tax bracket that you would have to pay as a simple day trading where you pay more in taxes on, for holding on to a share for more than a year, you pay less taxes, up to down to 15%. Now, I don't know about you, but when I'm saving money on taxes, I think of it as a win and another income that Uncle Sam's not taking my money. Pro number 3 is it's just so easy to buy. Before it was so tough. We had to call our broker or go to the bank and ask them to invest into a company for us. They used to buy a share. We didn't really know what kind of price we were getting it at. But now these apps have made it so simple for us to invest in. They are giving us updates in real time, and all we have to do is hit a buy and sell button. This is amazing. They've given the power to the people, and I'm not going to talk about Robinhood in this moment, but these apps in Canada have been doing very well, and these new platforms that have been coming out have been doing an amazing job for us retail investors to make money in the stock market. Pro number 4 is that you don't have to be concerned about the short-term volatility happening. You know, we got Elon Musk sitting here and tweeting about how the stock price is too high, and everybody panics and sells it. But you're going to see articles that are going to be positive on the company that you're going to see, and you're going to see articles that are negative on a company. If you believe in where this company is going to be going in the long term, you don't have to be concerned about the noise that you hear up in the short term. So not worrying about the volatility happening like this, constantly going up and down, you know that there's a long-term vision of where this company is headed. Now, some of the cons of investing in the long term is how long it's going to take, because that's your strategy. You got to know that Rome wasn't built in a day. Good things come to those who wait. You can't rush a masterpiece. This is everything that we're going to be putting together. We see traders that are making these amazing gains overnight, and you automatically you just want to switch your investing strategy and start becoming a trader overnight, or start listening to people on Facebook or Reddit. Con number 2 is if you're investing in a long term based on a hype stock, you're just going to end up bag holding. There's a lot of people who ended up buying at the high, and now that it's dropped significantly low because the hype is gone, they're stuck holding this bag. And now they think that they're gonna come back to those same highs, but it was a hype stock. People just got in and got right back out. They're gonna think it's gonna be known as diamond hands. Con number 3, there's always gonna be a risk to long-term investing. Throughout life, you're gonna need to rebalance your portfolio. Think about this, people would invest into the fossil fuel stocks because they think this is gonna be the future above and beyond. But we have seen how renewable energies has made such an impact on our life. So you always need to know, you need to manage your risk when it comes to long-term investing because you need to keep rebalancing your portfolio. Con number 4 is market crashes. In a long-term investment plan, a market crash can happen when you're retiring. So it's always good to know that when you're rebalancing your portfolio along the way, these market crashes won't affect you. So listen to this. You can either chase trades or sit back and watch it grow. Guys, thank you for watching Think Thicc. I wish you growth from here on forth. Now get out there and make some money.